Hi everyone, my name's Daryl Payne, CEO at As Good as Gold Australia, and this evening once again I'm joined by my brother Brian and partner at As Good as Gold.
Hey Daryl.
And tonight we're privileged once again to interview a very special returning guest. Founder and Managing Director of Matterhorn Asset Management and Gold Switzerland. I speak of none other, of course, than the legendary Egon Von Greyerz. Good evening, Egon.
Good evening, Egon.
Good evening, Daryl. Good evening, Brian. Nice to see you, and good morning from Europe.
Yeah.
Yes.
Yeah, absolutely. Wow, Egon, what sort of a world are we living in at the moment? Unprecedented times for us, not so much for the world, I don't think. The world's seen this before.
It's a bit of a pickle at the moment.
Absolutely it is. But, I mean, as I speak, most of the major markets are in disarray. You've got stock market, real estate, cryptos, we've got wars. Having said all of that, I'd like to bring to your attention an interview that took place only a couple of days ago. And I got the shock of my life. I shouldn't have, maybe, but a gentleman was being interviewed. He was an American economist. And the chap that was interviewing was a man by the name of David Koch. And I think he got a real surprise at this gentleman's response. David said to the American economist, he said, so what on earth has brought about, brought the economy to the position it's in now? What's led to this? Was it the war in the Ukraine? Or was it the pandemic?
COVID, yeah.
Well, COVID, what do you put it down to? And this gentleman said, look, that had a bit to do with it. Of course. He said supply chain issues with, the war in Ukraine, and pandemic, of course, a lot of money had to be poured into the economy. We understand all of that. But he said, look, I've got to share this with you. By far and away, the biggest reason for this massive downturn in the economy has been the absolute mismanagement of fiat currency and the printing of currency right throughout the world by central banks all around the world. And I could see David Koch startled by these comments. And he went on to say, you can't keep doing this. The debt levels now all around the world are at unprecedented levels. And he said, business can't operate that way, and nor can governments. And I thought to myself, well, here's not the first time, but it's rare,
unusual,
where somebody of this gentleman's authority is standing up and starting to tell the truth. And, when one thinks about this, I look at business generally, and this is one of the biggest problems, that most of these people who are in government or run central banks have never been in business before. And so if you are in business, as Brian and I have been for 30, 35 years, you have to be in credit. You've got to have some reserves in your account. You've got to run a surplus so that when you experience tough times, you're in a position to be able to work your way through it because you have those reserves. And if you don't, well, you can go into liquidation. Yes, you go into bankruptcy. But this is where the world is. The world is heading into bankruptcy if they're not already there. They've never, for the last 20 years, Egon, as we know, they've never run surpluses. They're running deficits all the time. And so if they come up against a war in Ukraine or any other major issues, they just borrow, they just print to resolve or attempt to resolve the problem. But my point first, I've got to ask you this question. I believe that The Economist yesterday is just one of many that are starting to finally tell the truth and tell it how it is. As this occurs more and more often, I think you're going to find more and more people will research, want to know more, and I think they'll head to gold in a manner that we've never ever seen before. Your thoughts on that? Do you see more of this happening, Egon? around the world, or is this an isolated incident?
You know that for the last 20 plus years, I've been talking about debt and the inevitable conclusion of this era, which will be first most probably hyperinflation and then a debt implosion and deflationary implosion. Yes, to me, governments, politicians, and central bankers are politicians. The day they put their central bank hat on, they become politicians. They're not independent bankers at all. And they all have to lie, and they have to find an excuse for their actions. And their actions, as you just said, is creating money, and has been for at least 50 years, since 71, when the gold window was closed. And now we've, so the debt has gone up exponentially. But what's happening now, of course, it's Putin's fault now. Now it's so convenient. Putin has created all of this himself personally. And he's an evil man, and he's the one who's now put the world in a mess. And as you said also before that, no, it was COVID. COVID created this. Since I spent some time and have lived longer times in the UK, of course, before that we had Brexit. So there's always a reason to use as an excuse for politicians. But we know that that's not the case. We know that politicians and even more so central bankers, all they want to do is to pass the baton on to the next leader, and in the meantime they want to try to buy as many votes as they can. And there's only one convenient way of buying votes for them, because the only way they know, and that is to print the money. And that's why but at the same time, sure, we can blame the politicians, we can blame the central bankers, but this is also part of a cycle. It's part of the natural cycles of boom and bust that the world goes through, always has, and always will. Now, but by governments and central banks interfering and therefore trying to defer the inevitable, then they, as you just said, they create more debt and more money that people cannot repay. And then it makes the situation much worse. And that's what we are seeing now. The outcome was inevitable. I mean, this didn't start with COVID. I mean, if we just go back to COVID, we know that 2019, in August, September, all the banks were almost on the verge of collapse, and the Fed had to come in and support the market with repos, and the same for central banks around the world. Now we're again in the same situation. We saw it, for example, in the UK market in the last week or so. When UK came out with this mini budget, some tax changes, some tax reductions, etc., and the market reacted instantaneously by selling off the pound and by selling off gilts, which is government bonds, and the Bank of England had to come in to the extent of 65 billion to support the bond market, because the bond market then. The pension funds were saying, we can't take this anymore. We've had such an awful time. Our stocks that we hold for pensioners go down. The bonds go down because they have this 60-40. That's the only thing they know. 60 stocks, 40 bonds. And the whole of that portfolio is collapsing. Stocks and bonds are collapsing together. They never seen that before to such an extent. And they don't know what to do about it. Obviously, they don't hold gold because they don't understand gold, and most of them are not even allowed to hold gold. So that they and therefore, and it's not just that the bond market collapsed, but the biggest problem here is, of course, derivatives, because everything that concerns financial instruments in general, but in particular interest rates, always have a derivative part to it. And all institutions, all traders, all funds, etc., they are in the derivative market. And as we know, a lot of instruments created, whether it's stock funds or bond funds, whatever it is, are just synthetic. They don't actually have the real underlying instrument. And therefore, obviously we don't have exact figures, but the BIS in the early, around 2010 or 12 or whatever, they reduced the global derivatives from 1.2 quadrillion to about 600 trillion by just arbitrarily netting everything off. I think 1.2 quadrillion was the right figure, and I think that has grown now. The over-the-counter derivatives that we can't really measure because we don't see the figures, we are probably up to 2 quadrillion now. And that is the big risk that will blow up one day, on top of the debt risk of 300 trillion globally. And that's what markets are seeing now. So the Bank of England saw that, had to support it. The ECB has the problem continuously because they have for the last decade or so supported the Mediterranean countries. And of course, Germany was the really only strong party in the EU, but of course now we know what's happening to Germany. Germany's collapsing right in front of us because of an absolutely idiotic energy policy, and then exacerbated by an even more idiotic decision by America, and then followed by Europe to sanction Russia and stop virtually all energy deliveries from Russia, which Europe is totally dependent on, Central or not the UK as much, but the rest of Europe, Germany, of course, to the extent of at least 50%. So that's where you have a mess now. And of course, and it's not, no one is intending to solve that problem. I mean, we can come on to that later, but the whole of the war and the sanctions. I mean, remember that during the Roman Empire, the trade, there was free trade, and all countries could trade with each other, and that's why the empire prospered for such a long time. If you kill off trade, which the US has done now, and Europe has followed, then the world economy collapses, and that's what we're seeing now.
I noticed that you've referred to dark times, moving into dark times, and this could be a very extended period of time. It's not going to be over. It's not going to be over like the 2008, 2011 GFC. You've made reference to the fact, Egon, that the Dow could drop to 3,500 and gold could go to $35,000 an ounce. Could you just share with our audience, I mean, because these are drastic numbers, and the economy would be in an absolute dire position if that were to happen. Can you just explain why or how you came to that conclusion?
Yes, of course. I do realize that forecasting is a mug's game, and you will always be wrong. But I'm not, I know that to many people this sounds like sensational figures and totally unrealistic. But, you just take 1929, when the situation in the world was nowhere near as dire as it is today, and when debt was nowhere near as high for globally as it is today to GDP or any measure, then the Dow crashed by 90% and led to the Great Depression, which was only then the world came out of due to World War II, of course, and arming for World War II. So what I'm saying is that we saw a 90% fall then of the biggest stock exchange in the world in a situation which was nowhere near as severe as today. Now we have a global bubble, which has never happened before. There's no country anymore that can save another country, because everyone is in the same situation. Everyone has debt in the West, the East, developing countries, etc. And therefore, we will now, and of course, no one knows exactly when it's going to happen. Only future historians will tell us, yes, of course it had to happen, and that was obvious. Now, when you're at the end of an era, it takes longer than you expect. So you mentioned 2006-09, the great financial crisis. Of course, many of us thought that was when it was going to turn, but central banks skillfully managed to print another, in those days, only tens of trillions, and guarantee in order to save the world. But that's only all we've seen for the last 20 or 10 years since then, roughly, or 12 years, is a stay of execution, which means that debt just increased, and the risk increased. When debt increases 5-6 times, or several times anyway since then, then risk goes up exponentially. And that's what we see looking at now, for example, and I mentioned the derivatives. So the risk is much higher now. And therefore, taking your example now, Dow 3,500, well, that's just, obviously I'm using various valuation methods that like stock market to GDP, etc., like the Buffett indicator. But, so I'm saying that I would not be surprised to see the stock market going down by 90% at least. And 90% is 3,500 roughly on the Dow. So that wouldn't be surprising in my view at all. And then, so what will gold be then? Well, of course, we are then going to measure. We don't know in what money we will measure gold, and this is always the problem. We look at it in today's prices. We don't know what the dollar or what the Australian dollar or the euro will be at that particular point. But I wouldn't be surprised to see a ratio of, as I said, that would be 0.1 on the Dow gold ratio. I mean, we were in 1980 down to 1 for 1. Sorry, not in 1980. That was one Dow was 850 and gold was 850. That was in January 1980. So that was 1 for 1. Now, back in the early 1800s, it was 0.2 for 1. So that's 5 times. The gold will be 5 times the Dow, but I'm saying we are now in a market where things, when they turn, and I think the turn has started, we will see massive overshoots of all of these support levels, and therefore, if 0.2, for example, was a support level, and then I could easily overshoot to 0.1. But as I said, I'm not. These are not really absolute forecasts. They are indication of what can happen in a crisis situation, which I expect. So people shouldn't count on they will be. We will see an Dow at 1/10 of gold. They shouldn't count on it, but what people should look at is, and that's the only thing we are concerned about, is the risk, and the risk is now massive that all assets markets, all the epic bubble markets of stocks, bonds, and property will collapse, and that gold will start to reflect the massive distraction of paper money, and that has not happened yet. Gold has not yet reflected the major increase in money supply that we've seen. And so that's the simple equation. Whether it goes down, whether it's 10 times the relationship, or whether it's less or 5 times, whatever, it doesn't matter. It's the risk, it's the trend, and that's what people should worry about, and it's the protection they should think about rather than focus on the absolute targets.
Hence your reference, of course, to and Brian and I have spoken about your comments many times. How much gold should one own? As much, whatever they can't afford to lose. It's a great comment, and I understand where you're coming from with that. Would you just like to expand on that just a little for our audience?
If somebody asks me, what percentage of my financial assets should I have in gold, and I always answer that you should have as much as you feel comfortable with. And then I say, I have a major part in gold and a bit and a bit in silver. I'm, not that I can say that's right. It's right for me because what else do I put the money in? Yes, I could put it in. I wouldn't put it in the stock market. I think that's going to go down by 90% over the next few years. Bond market also, I think, will collapse, and many governments as well as companies will default. Governments normally, in Western governments that can print money, don't default. Technically, they default, but officially they just print more money, which makes the currency worthless, which is another form of default, of course. And property market, well, you know about property bubbles in Australia, and we've seen them everywhere. And people got used to, you didn't have maybe as low rates as 1 or sub 1 like we have in Switzerland. A friend of mine borrowed a year and a half ago. He borrowed 10-year money at 0.9%. Now that's gone up to 3%. In the UK, rates that were 1 to 2, they're up to 6%. And we know that most borrowers can't cope with this. When I was young, I remember my friends in England, because they were the banker friends I had, they had a special subsidized rate of 5%, which I thought, everybody thought was fantastic. How cheap? 5%. Because normal rates were 8% roughly at that time. And of course, I've told people many times about when I moved to the UK, in 74, my first mortgage was 21% for a while in the UK. It was a bit tough, but we coped with it because we had good margins and we didn't borrow 95%, etc. Or 105 even for my many. We're going from one extreme to the next, and I think this is the end of a big era. So we will see, the unwinding of debt, we unwinding of the assets that support the debt. Of course, the debt will never be repaid. We know that, so it has to implode. But when the debt implodes, so will the assets that supported that debt, and that's what I think we will see. Of course, exactly how and when it will happen, nobody knows. What I'm saying is the risk is higher than ever now in history. So therefore, protect yourselves. Now, coming back to your question, so what should the investors have? And we're already back in, when I started talking about this back in 2002, 2003, whatever it was, I told people that, I thought that even at that time, that up to 50% would be the right percentage. Now, people that in 2002, and you mentioned that before, when I had my daughter's wedding, told people to buy gold, and if they that was in the UK, people who bought it then, that was £200 for an ounce of gold. Now it's over 1,500, so it's up 7.5 times. In Australian dollar, you're up slightly less. You're about 6 times in gold in Australian dollars. And that's the same for virtually every country. Dollar is temporarily a bit stronger, but it's still 6 times or so, or more, 6 to 7 times. So, gold only reflects what's happening in the world when it comes to destruction of money. That's all it does. It doesn't do it in a straight line. There are fluctuations, and obviously all currencies can't lose as much at the same time. So therefore, because they fall against each other simultaneously as they all fall. So that's why temporarily gold in dollars is a bit stronger, but that's temporary. The dollar, US dollar's turn will also come, and it will start falling more rapidly because let's face it, it's the most indebted country in the world, has run a deficit, has increased debt, federal debt since 1930, with only about five exceptions. So, that's an incredibly over-indebted economy also. What's going to happen is inevitable. History tells us that. That no politician or no central banker ever studies or because they think it's different because they live today. It tells us that currencies always go to zero, always has, without exception throughout history. And since the dollar, and all other currencies have already fallen 97 to 99% since 71, they will fall that additional 2-3% in the next few years, which is 100% from here, you have to remember. And the risk of that is massive, and that's the only thing I'm worried about. I'm not worried about if the target is going to be 3,500 Dow and $35,000 gold, but I think it's not unlikely. And of course, then if we get hyperinflation, then of course you're talking about totally different values.
Sure. Yeah. Valid.
Very valid points. Egon, I had to smile when you mentioned the fact that since your daughter's wedding, and you're talking about gold at £200. I've got a wedding coming up, and I know my wife said to me the other day, "Now I don't want you talking about gold and silver, please." But it's very hard not to, because it's such powerful stuff that's on your mind all the time.
Mentioned me and said, 2002, I now have a friend. And the people have followed me 7.5 times, and I wouldn't be surprised if you make more than that in the next 20 years.
Exactly. I did have a question on the UK pound, but I'm going to miss that one because we have talked about England and the trouble that the UK is in at the moment. I'm going to move on to an article that I read just recently that you did with King World News. And I quite often read Eric King's information on King World News. But there's a couple of statements that you made, and I would just like you to elaborate them on a little bit. So, in the latest King World News interview, you stated that Russia's President Putin is the only world leader amongst the world leaders that talks about and understands history. Can you explain to our viewers what you meant by this statement? And what, in your opinion, has President Putin got against the West, most of all the United States?
Propaganda that we get on Russia and the war. I mean, wars are horrible, and in no way can I support that war. I understand the reasons for it, and the Minsk Agreement 2014 and about Donbass being having the right of self-determination. And Crimea also, of course. So I understand the grudge that Russia holds, but and then I have to add to that also that the world is bankrupt, and now in that severe crisis that the world is in, it takes absolutely suicidal decisions. Like sanctions, which not only kills Europe, but also world trade, as I said before. So we have a bunch of absolutely incompetent leaders in the world today. There is not a single statesman anywhere. So what does America do and Europe follows? Well, send unlimited amounts of weapons and money to Ukraine to continue to the war and to fight and to kill people. Why is nobody taking the initiative of trying to reach a peace agreement? A small country is not worth it to actually have this fight about. But sadly, all world war starts with a small country and a small conflict, and then grow. And of course, many people are arguing that this is nothing to do with Ukraine. It's just a pawn, and it's actually U.S. against Russia. And I mean, it's too long to go into this now, but of course, so that makes the situation a lot more serious. And Biden and whoever pulls his strings, because he's clearly not the one who's taking the lead here or taking making the decisions, but he's got strong people behind him, neocons or whatever, that are pulling the strings, and they want war. They want to absolutely squash Russia and potentially China also after that. So therefore, they're sending weapons and in order basically to create a bigger conflict. That's it, and the risk is very high that that's the case. Now, if you read, so these people are not statesmen; they're not trying anything. If you read Putin's speeches, yeah, I mean, they are, I would say, and nobody does because nobody publishes them, and Western propaganda basically, and war is all about propaganda. And let me just mention quickly, did you see this thing about gold teeth in Ukraine? So the Ministry of Defense in Ukraine published an article, a news release about with a whole box of gold teeth, and said that this was tortured Ukrainians that the Russians had tortured. So that was an official statement from the Ministry of Defense. A reporter started to dig into it, and he found that this box of teeth was from a dentist in Ukraine, and that was the 30 years teeth that he's pulled out of his patient. And I think that was, I think it was in the Donbass region. So that had nothing to do with torture or anything, but it was just a pure dentist work. But this is typical. So the Ministry of Defense uses this. Therefore, we can't believe a single word what we read in the papers. And since we only get one side, it's very difficult to get the other side. But if you can read and study Putin's speeches, and he always goes back in history and explains why, both from the point of view of Russia, and also explains about what's happening in the West and the decadence in the West. That obviously, and therefore, I mean, his speeches are much more nuanced than any leader in the West. Boris Johnson only took the lead to help Ukraine because he had his Partygate. He wanted to actually get away from the Partygate accusations, so to hang on as prime minister. So this is, they don't have the right motives at all, the Western leader. There is no statesman, as I said. So therefore, yes, I think the peace, no one is trying to reach peace. And that is what is so sad, because that's when you actually get into serious conflict. And, the risk of a world war, is major, I would say. I hope it won't happen. Russia has never, ever invaded West, never come to Europe, except for when they pushed the Germans out in the Second World War. And I sincerely hope it won't happen. But the way that the US is escalating this is making it very serious.
Yeah, I totally agree with you that there seems to be no peace movement whatsoever to bring the two countries together, right? Sit down at the table and dissect the differences, right? And put something on the table that each party agrees upon. Nothing's been attempted. No. So, yeah, it really is appalling to see.
Yeah, I mean, Russia is really asking for, honoring of their Minsk agreement, which was set with Germany and France really settled that with the Ukraine and Russia, and that was to make Donbass, as I said, an independent region with and self-determination and having an election. So that is, I mean, Putin's demands are not that major, but still, no one is trying to get anyone to the negotiating table. And that shows you that there is a desire in the US for war against Russia. And that's what's frightening about this.
Yeah, quite frightening. There's one other statement that you made in this article, and just to explain, go further into it just for a little bit longer. You made a statement, and I quote, "As debt implodes, so will all the assets that the debt supports." Just elaborate just that little bit further.
people think that, and that's what's going to be tried in the West, of course. The US and everybody will start with a digital currency, which suits them also in order to control the people and tax the people or fine the people, or whatever, all the things you could do with a digital currency. But also they create the digital currency and they make the old debt disappear. Well, that's just old dollars. They don't exist anymore. They put it just somewhere, dig it down in the ground. But you can't make debt disappear, because if you make debt disappear, the assets that were supported by this debt will also disappear or implode. They might not go to zero, but they will come down a long way. So that's why, there are always two sides of a balance sheet. You have assets and liabilities. And if you take away one side, the other side will not stand there without support. But that side will implode too. So it's very simple. And that's where we know that. We know that it's the debt that's pushed property prices up in Australia, in Europe, in America, and it's debt that has pushed stock prices up, et cetera, et cetera. And that's the only way that the world can continue to grow soundly is that this debt disappears. And it's not going to disappear by just hiding it and creating a new currency. A digital currency is just another fiat currency, which will be printed even more than the previous ones. So that is no solution. So you can't make the debt disappear. Instead, it has to implode, and the assets has to also then implode at the same time, because that's the way the equation works. And then the world starts afresh again from a much lower level. That's the only way we can get continued sound growth in the future, in my view.
Yeah. Well, I have to agree, because the whole point is with fiat currencies, we've had many of them. We've had them for 5,000 years at different stages. They all go to zero. And this one, the American dollar, will go to zero, as Egon's pointed out. And that's why I don't think a 10% in gold really cuts in the ice. Not for me anyway. It's a personal thing. I have a lot more than that, because I see gold as money. Gold and silver is money, nothing else. When the right opportunity comes to be able to buy a business, to buy land or whatever, when the price is right, you use your gold to do that. Darren?
Yeah. A new bill, Egon, has been introduced to bring back the US to the gold standard, to control government spending and inflation. Well, it would certainly do that, but they wouldn't be too happy about that, would they? No. Member of Congress, Alex Mooney, introduced the Gold Standard Restoration Act. The bill looks to peg the US dollar to gold to address the growing inflation threat, massive deficit spending, and instability within the US monetary system. The gold standard would protect against Washington's irresponsible spending habits and creation of money out of thin air, said Congressman Mooney in a statement. Prices would be shaped by economics rather than the instincts of bureaucrats. No longer would our economy be at the mercy of the Federal Reserve and reckless Washington spenders, Mooney added. Well, that we know and we understand.
Sounds good.
It's powerful stuff. The proposed legislation would require the Federal Reserve and the US Treasury to disclose, I'd love this, to disclose all records pertaining to the government's gold reserves and gold-related transactions over the last 60 years. I've got to ask the question, Egon, your thoughts as to where this could go. Will it fall on deaf ears, or could Congressman Alex Mooney start to make some headway? Your thoughts on that?
Well, you answered it already. We have all by laughing at it. First of all, Congress could never approve that, because their whole raison d'etre is to be able to print money to buy votes, as I said before, to survive, and that's what they need to do more than ever in coming years, because the economy is going to collapse. It will fail, of course, but still, that's what they're going to do. And a gold standard would not make that possible. So that's number one. That for that reason, it won't happen, in my view. Number two, I don't think there is much gold owned by American state, whether it's in Fort Knox and other places. I don't think the 8,000 tons are there at all. So they couldn't have a proper audit of all their physical gold. There hasn't been one, a proper one, since the Eisenhower's times, as we know, in the 50s. They audit bits of it, but they never put the whole together. So nobody knows what they have. So I don't think they would let that happen either. I'm not in favor of gold-backed currencies now. I think they will just they'll find another way to manipulate it. I just think that waiting for the futures markets to collapse and that we get to a situation of free gold, that gold is freely traded based on the physical. I think that will come with the collapse of the paper market, and I don't think we're that far away from it. It could be a few years, but not many.
Excellent.
Yeah, he's got a tough job ahead of him, hasn't he?
Oh yeah, Mr. Mooney. Look, I'm grateful.
Enormous respect.
Enormous respect, but I think Egon's right.
Job.
I think the whole world's going to come down a lot further before it instigates.
Yeah. Egon, once again, look, before we go, and we've just got to thank you so much for your contribution to As Good as Gold Australia. We thank you so much for it, and we've developed a friendship over the years that we have enormous respect for you and what you've done. You manage, of course, the biggest private vaulting service in the world, Matterhorn Asset Management. We must have lots of people from all around the world watching this channel tonight, and many of them would be looking at, I'm sure, in placing their gold in a recognised vaulting service, and yours is the biggest in the world, biggest private vaulting service in the world. Could you just share some views on what you might be able to offer any of our clients that may make contact with you looking for a vaulting service?
Well, thank you for asking, Darren. Yes. So we set this up just over 20 years ago, and initially it was for our own family funds and some investors that we co-invested with and advised, and then eventually we opened it up because there was demand from different sources around the world, so we have a vault in Zurich. There our minimum is $400,000, and then we have, as you said, the biggest private gold vault in the world, which is in the Swiss Alps, where the minimum is $5 million or 5 million Swiss francs, and that's a vault which is nuclear bomb proof, earthquake proof, gas attack proof. It's got 10 security zones and has to be opened by hidden security centers, two different ones somewhere in Switzerland, and every day we're being watched on cameras, etc. So it's a unique James Bond experience to go there. And if somebody ever gets in there, somebody wants to steal the gold, he'll never get out. That's for certain. But he won't get in either. So it's a very safe and very safe place, and very, very also very exciting in a nice area of Switzerland.
So we're here today in the biggest private gold vault in the world. And here, gold is stored for wealthy families, for institutions, for private banks, and even for some central banks. When you come through this vault, you go through a number of security zones. You're deep in the mountain here. We've gone for miles or kilometers through various security zones and different levels deep in the Swiss mountain to reach actually where the gold is stored. It is the only vault in the world which is nuclear bomb proof, earthquake proof, gas attack proof, has a security level that doesn't exist anywhere in the world.
So that's what we do. We help investors from around the world to preserve wealth, and that's our passion. Really to helping other people, because we think that there's going to be the biggest wealth destruction ever in history now. and people are not protected, and most are not, because as we know, there's only 0.5% of world financial assets in gold today. And that means that all the rest, i.e., over 99%, are in other assets. And they are going to suffer dramatically in coming years. So, I mean, if they only put a few percent at least in gold, if take the Venezuelans as an example, if they'd done that 10 or 20 years ago, just put a little bit of the savings. You don't have to have the big amounts that I'm talking about, because there are many other services. But like yourself, they can buy the gold and get it delivered, or there are other people who store smaller amounts. So gold is for everyone, not just we happen to focus on the higher end of investors, but it's for everyone, and everyone should think about protecting some of their assets. And just buy a gram of gold or an ounce of silver instead of buying a couple of beers or whatever whatever you're doing for your friends or yourself. So that's all it takes. Just save a little bit. So that will, if things go the way that we expect, you and I, and the way that it has happened in many countries, like Venezuela, like Zimbabwe, like a lot of countries around the world, then that will be the best thing you ever done. And I think that's what people should think about. We help the bigger investors, and you help smaller and bigger investors yourselves, and people should really think about protect yourselves. And I think that's the most important thing. Obviously, if they want to come to us, they can just go to our website, goldswitzerland.com. But as I said, as good as Gold Australia, as you say, we are very good friends. I know you provide an excellent service there for normal investors. So that's the right thing for certainly people in Australia also to do, and other countries. We hope that they follow our advice, not for our sake, but for their own sake. Yeah.
No, I think what Egon said then is so vital. Just start. I remember when we started after a conversation with Peter Daniels, right? Yeah. And once you start, you just add to your position, don't you? You add to your position, add to your position. When we started, we never thought for a moment that we would ever be involved in the industry. But as you start and you get more involved, you research more and you want to know more. And you engulf yourself in information in the end, don't you?
Yeah, well, we were involved in manufacturing, so that motivated us to find something different.
Absolutely, it did.
But that ate up all our excesses, and we knew we had to put surpluses into some gold and silver. Yeah. So that's what motivated us to do it.
Yeah. Wise words once again, Egon. Thank you so much for your contribution. Always appreciative, and we thank you for your friendship. We also would like to thank our viewers and our subscribers for constantly supporting this channel. And I can only say until next time, to all of you, stay well, stay focused, and goodbye for now.
Goodbye for now.